Fair enough. Fair enough. So, um, today's very stream would be about price action, right? I mean, there have been many questions for what the price action is and how to practically use it, right? So, I'll allow myself to practically shortly introduce the price action technique concept behind it and how to use it for trading, right? So let's shortly create a new chart and now, or actually no, just make a copy and just clear it up. Here we go. Okay. Fair enough. Yeah. So let's start from the definition, right? Because we to actually comprehend, to actually understand and follow some given topic for whatever we are dealing with, we need to understand the nature of it. We need to understand the definition of it to simply know what we are dealing with, right? So this is pretty logical. And if we mean price action, then what we truly mean by the definition that this is one of trading techniques used by traders to simply make money trading based on price history for a given instrument, right? This is one of techniques out there that people use apart from Ichimoku, apart from moving averages, EMAs, right? Apart from Fibonacci levels, support resistance, um, and practically for the price action, because this is like an umbrella term a bit, we can practically use price action name for anything that regards the price alone, right? So if we have like the price chart that is completely naked, right? No indicators. I'm actually, just for myself, I'm price action momentum trader. So I use price action technique backed by momentum trading to spot key swings on the market based on the momentum, right? Because this is what I believe simply works good for cryptocurrencies. And so naked chart trading, right? We can call it naked chart trading simply as well, very often. And naked chart means that there are no indicators, no volume, no lines practically, no moving averages, and no indicators, no oscillators, etc. To simply keep it as simple as possible to gauge and project on price movements for future price movements based on past history. With the candlesticks alone, right? If we put it in a candlestick form or bar charts, whatever. Um, so knowing the definition and the concept behind it, we can focus and actually just figure out and consider this to be a form of self-fulfilling prophecy, which technical analysis is quite known for. And because TA is a bit of self-fulfilling prophecy, right? So imagine like this is like a way to communicate between traders very often. So if many traders at the same time all around the globe would use, let's say, similar patterns to trade with, right? Or use similar levels marked for their importance. So this is it is always subjective a bit, but there are some objective rules put in different models and theories that people use, right? So the more people use practically given concept, given trading technique, the more probability we are practically having that this pattern spotted by price action traders, if we talk about price action, would simply unfold in a more expected way, right? Because if hundreds and thousands of, very often millions of people, let's perhaps stick to tens of thousands and hundreds of thousands people would trade the chart in the same way, when they interpret this chart in the same way, then they are practically posing some pressure onto the market, right? They are practically using and implying some solutions. The very often they post it on Twitter as well, a bit manipulating the public opinion behind it. Just see what CNBC Fast Money does, right? So this is all practically used to project future movements based on history, price history for a given instrument using only chart alone, right? So this is the concept behind the self-fulfilling prophecy that price action trading is, as well as other trading techniques. But it would always depend and differ for different markets, right? For cryptocurrencies, the it could be, let's say, price action, or it could be Ichimoku. Well, I mean, Ichimoku is not most frequently used technique, right? So we cannot really expect that if fewer people simply trade Ichimoku than let's say price action, then we can deduct, and we can practically imply on this basis that price action would be having like a stronger influence on people's opinion practically, right? And sentiment around it, right, as well. So this is to know that that leading, let's say, leading techniques, leading concepts would be different for various markets. And for forex, for crypto, for commodities, for indices, right? Uh, it's all different for the leading technique. But the more people use the very same technique and the very same concepts to understand and comprehend the market in a similar way, the more probability we are practically dealing with to for some given patterns to unfold in an expected way. So I think it's pretty clear. And price action, we are dealing with candlesticks, with chart alone practically, which means that we can use some key patterns, some key candle formations, very often some key levels, right? If you are level traders, per what Tom Dante, for example, is, right, to the best of my understanding. And we would mark different levels, different importance in a chart, to simply show the using the paradigm practically, that the higher the time frame is that we use, the more importance it brings for the overall, let's say, leading trend on the market, for the primary trend, right? And so we would mark some key levels, let's say weekly, monthly, right? For monthly, it's not like a big price history for large piece of history for Bitcoin, for perpetual inverse swap contract for BitMEX. But let's say for weekly, right? If we go for weekly, then we would mark some key levels noted on the weekly chart. We can definitely say that open and close prices are the ones that bring key importance, right? Because they are practically setting and deciding on the sentiment for the investors, right? So we would mark practically, the like for the weekly, I mean, it's quite different, but for the daily and lower time frames, because we would naturally stick to greatest swings, to most important swings on the market, because where the swing is, practically, it means that the liquidity was there enough to there was enough liquidity to stop one side, one party of the market, the bulls or bears, practically, right? So we would mark open close price very often, for to be the main for or one of the main measures for price action traders. And here for the weekly, we are having just like a quite a confluence zone, quite a confluent and consistent zone, as you can see, for 11.4, 11.5 being very close to each other, which means that we can project it to be more important than not for traders, right? If it stopped here for this week, freshly weekly, which for current week doesn't look too good for now, right? But they would consider that to be somewhat of key levels to practically decide on the bias, on directional bias for the market, lower time frames, because what we are dealing with on these weekly, it would influence the daily, it would influence the mid time frame chart for 4 hours, and low time frame for hourly, right? So this is this part, obviously. So we are searching for key, let's say, spots, right? Here was the weekly open, here was the weekly close price, and at the same time the weekly opened here with no practically gap. Like gaps are not very often met, definitely on big on high time frames for let's say BitMEX, that is 24 hours per 7. But let's say for CME or for other futures that are closing for the weekend, there would be many gaps at times to fill for such volatile asset as cryptocurrency is as a whole for the kind. So again, we are having the weekly close, weekly open price close here. We are having the weekly close here, right? We can definitely say that for this very week, uh, that was right here. It was pretty decisive point to upswing for lower time frames, right? To upswing for this currently lasting week. Let's say we can definitely say that here for 8750 we got like a key marked level for open price for open close, right? Here we are having just see for how much liquidity and how much practically just strong, I would say, defense for this zone, right? For the tight zone 74.60 and 76.30, let's say. So we can definitely mark it as a form of stronger zone for that. And everything that you see and spot on weekly, that you see and spot on monthly, what the heck is that? On the monthly here, then you can see that for monthly chart that wouldn't make too much sense, right? So that's why we would go and mark key levels for the monthly, and perhaps use a different color to differentiate one from another. Then we can tell that this part is key, right? That this part is key because it closed the price and opened the price for July, right? So like open closed price for June and open for July, obviously because it closed for July at 10.88.5, right? So that would be the key now, I would say, directional, like I don't want to say arbitrary, right? But like a key level to decide the low and mid time frame bias for. And if we hold trading above the monthly levels, right? If we hold the trading above the monthly levels, then we can definitely say that it is more bullish than not for it, right? For lower time frames. So anything that happens of a higher time frame is practically considered to be more important for what's going on lower time frames. I think it's pretty clear. And this way you mark where is that? Let's have it two separately. This way you mark levels. This way you mark some key liquidity points, simply because the liquidity, like big plays, especially in cryptocurrency, like big plays using whale money, big orders, are practically only about liquidity, right? Because for illiquid markets to pour in or pour out practically big money, you need to have a counterparty to fill your order, right? So if you want to sell it, there must be somebody to buy it. And if you want to sell 100 millions, let's say, so either you wait, a few days for it to fill, or simply there would be like one large whale to buy that from you. And yeah, just a very short note, here. Let's get rid of these lines and levels, and let's put it for where's that? Here. So we can definitely use for naked chart trading, for price action trading, as well, candle formations and patterns, chart patterns, right? Patterns like the continuation patterns, reversal patterns, such as this could be being formed right now for the ascending triangle or so, right? So anything that doesn't use practically the indicators for that, but only price alone, is considered to be a form of a price action trading. And so here we get the ascending triangle, if let's say if it makes its way to here to retest the resistance and put one more touch point here as well to decide a textbook breakout. But again, if it happens or not is just another story. This is all a game of probabilities. And again, we would mark for the key levels. I mean, here as well, just before I say that, here as well, you're having practically, let's make it thick. Here you're having, typical bullish engulfing candle, right? The ones that we are seeing for this very part, right? I mean, the ones that market swinged on at the upswing. So with the black one and the white one, right? So per Nissen's understanding, for Steve Nissen's understanding, for the author of Japanese Candlesticks book, for traders, he would state that bullish engulfing is a candle formation that happens and occurs after established bearish trend, which it is right here definitely, and it consists of two candles. One would be the spinning top or a small candle, which is the small bodied candle, and the another is completely engulfing in a bullish way here in the upward direction, right? So this would be called bullish engulfing candle. So we are having the pattern, we are having the candle formation, we are having levels, right? Just to add like a final short note on that, how to draw the levels properly, right? We need to understand where is the pre-breakdown or breakout for a given part, right? So if here, let's say for 4 hours, it's not quite visible, it means that it happened. For 1 hour. So it means we would like to find it on, let's say, 50-minute chart, like on lower time frame, to see and spot where the swing, or even 5-minute chart to see where the spot happened, to practically use market level, right? So the pre-breakout level would be this one, right? This Dragonfly Doji, 9870. This would be like a pre-breakout level. Which means that if this level was like this big candle was a result of breaking this pre-breakout candle, right? So I hope it makes sense. And if we reverse that properly, and if we are having some form of a ranging here, let's say, right? If we are having some form of a ranging here, which is swinging in some horizontal trend for a low time frame, then we again see where is the pre-breakdown candle out that broke down practically through this channel, right? So this level would be practically here, right? And if this level broken, where's to put a color on that? This level broken, 10.275 and 0.5, this level broken resulted in breakdown for the range, right? That resulted in a further sell-off. So now this way we would mark a key resistances and supports for the pre-breakout and breakdown candles and levels. So just to wrap it up, the price action would be anything. The price action would be anything for the naked charting, which means no oscillators, no indicators, no volume, no other techniques implied on the same chart, right? But we use only naked chart for that. Naked chart, which means two scales: the price scale, vertical and horizontal, for the time scale, right? So we measure and record and track the progress of price in time, right? And this is one of many techniques. Simply we can use it definitely next to Ichimoku and other techniques. It lets us mark some key levels to set a bias for the next movements, practically to read it for the sentiment around some levels, for investors to decide whether it's more probable, because it is a game of probability, to break out or break down given level, right? So or given pattern. And yeah, so this is just a short summary. Do make sure, guys, to check out our Medium, which is Badass. Personally, I think go check out our Badass articles, and straight freshly posted from Walter Wyckoff, our friend, Inefficient Market Gap Theory, which learns on gaps, right? Which is quite interesting and up-to-date topic. So that is all for today's very short stream. I hope you liked it. Go and check out www.theburbness.com for more content, obviously. And yeah, that's all. That was CryptoBurb, and the next stream number 6. We are, guys, off.